Listen up. What I'm about to share with you, ISNT, just another market update. This ISNT, something you can scroll past or ignore because the truth is starting to hit the global economy like a freight train. And most people still have no idea it's coming. Right now, something massive is happening in the world of silver. Not the price action we used to analyzing casually. Not the routine updates, but a real supply shock that has the potential to change the entire precious metals landscape. And if you hold silver, if you're thinking about it, or if you're just curious about where the economy is heading, this matters to you. Here's the plain truth. For decades, silver has been overlooked. Gold gets the headlines. Analysts talk about inflation and the dollar. But silver quietly sits in the background, undervalued, underestimated, and underowned by the public. But smart money doesn't stay quiet forever. And what we're witnessing now is the kind of supply squeeze that flips the script on how investors think about silver. Forever, imagine a world where demand for silver keeps rising from industrial use, from investment demand, from central banks quietly accumulating, while the actual physical supply tightens to levels we haven't seen in years. It's not theory. It's not speculation. The indicators are screaming the same thing across multiple data points. Let me say this. When supply tightens in a market like this, especially one with industrial demand baked into every part of modern technology, prices don't just move. They explode. We're not talking about a gentle uptick. We're talking about a structural shift. A fundamental shortage that could drive silver prices far beyond what most analysts are currently forecasting. I want you to picture something and stay with me here, because this is where most people disconnect from the reality of this situation. Silver ISNT, just a metal for investors. It's in every smartphone, every electric vehicle, every solar panel being installed around the world. Global demand isn't static, it's climbing, and yet mining production has not kept pace. In fact, it has stagnated. Why does that matter? Because every ounce of silver being produced is going to critical demand sources. There isn't enough to satisfy all consumers, all industrial needs, and still leave a surplus for investors. When that happens, when supply is tighter than demand, a crisis isn't just possible, it becomes inevitable. And this isn't just about scarcity either, it's about perception. Markets move on fear and hope, not just cold numbers. Once traders and institutions realize that physical silver is becoming harder to source, you can bet money will start flowing into it faster than ever before. And that creates a feedback loop. Rising demand from investors chasing perceived scarcity creates even tighter supply, which then pushes prices higher, which attracts yet more investors. I'll be blunt. This isn't a gradual cycle we can watch over months. Signals are flashing right now. We're seeing increased premiums in physical silver markets, longer delivery wait times, and historic demand in bullion purchases. These are not small trends. These are structural red flags that tell us something much bigger is unfolding. But it doesn't stop with industrial demand or investor interest. There's something deeper and more alarming going on. Countries and central banks that have traditionally held gold or little silver are starting to change their approach. They're quietly accumulating strategic metals, and silver, despite being cheaper than gold, plays an important role in global reserves because of its industrial and monetary dual-purpose nature. Now, imagine what happens when national entities start stockpiling physical silver, not publicly, quietly, under the radar. When governments do this, it changes the supply map instantly. Miners can't keep up. Dealers sell out. Retail investors find shelves empty. This is how real supply crises start, not with headlines, but with actions behind closed doors. And you should know this. When real supply tightness hits, price discovery becomes chaotic. Standard metrics break down. Premiums on physical silver can far exceed paper price movements, meaning even if the spot price doesn't move yet, you could see bars and coins selling at much higher prices due to actual physical scarcity. This is a real-world physical problem, not just a chart pattern or an indicator on a screen. And that's exactly why people who understand markets are starting to watch silver like a hawk right now. Now, let's talk about the numbers, because numbers don't lie, and right now they're screaming at us. Global silver production this year has barely increased compared to last year, while demand from industrial sectors and investment vehicles is surging. Mining expansion is slow and expensive. Geopolitical tensions are affecting supply chains, and every ounce is becoming more precious by the day. Think about it. Silver isn't just sitting in vaults collecting dust. It's actively being used in everything from electronics to solar panels, medical devices, and electric vehicles. And while the industrial demand grows, investment demand is skyrocketing at the same time. ETFs, physical bullion purchases, and individual collectors are snapping up silver like it's going out of style. The math doesn't add up for a plentiful market anymore. Scarcity is becoming real, tangible, and unavoidable. And here's the kicker. Unlike other assets, you can't just print silver. It doesn't magically appear overnight like fiat currency. It has to be mined, refined, and delivered. When demand exceeds supply, shortages happen fast, premiums spike, and the market gets extremely volatile. And volatility, my friend, is both a warning and an opportunity. Those who recognize the signs now have the chance to position themselves before the broader market realizes what's happening. But this isn't just about profit. It's about security. Silver has historically been a safe haven in times of economic uncertainty. And make no mistake, the signs of financial stress are all around us. Inflation concerns, currency fluctuations, and central banks tightening policy while the average consumer feels the pinch. When uncertainty rises, people turn to tangible assets. Silver is one of the few metals that combines liquidity, affordability, and industrial relevance. It's both a hedge and a strategic asset, a rare combination that makes it incredibly valuable in turbulent times. And let me emphasize something here. This is exactly the point where human psychology starts driving the market almost as much as fundamentals. Fear, anticipation, and scarcity mentality kick in. People start hoarding, buying in bulk, and premiums soar. What starts as a manageable supply issue quickly escalates into a full-blown crisis mentality in the public eye. Suddenly, every article, every headline, every news report becomes a catalyst, and the market reacts violently, sometimes overnight. Here is another critical factor that most people completely overlook. Industrial demand for silver is not optional, it's a requirement. Electronics manufacturers, solar panel producers, and medical device companies rely on it daily. They cannot switch to aluminum or copper for certain applications without massive compromises. So as silver supplies tighten, industrial demand competes directly with investors. This creates a tug-of-war that's invisible to casual observers, but incredibly important for price dynamics. Now imagine the domino effect. Physical silver becomes scarce, premiums rise, industrial users start paying more. ETFs begin adjusting holdings. Central banks continue their quiet accumulation, and suddenly every retail investor who waited too long is left scrambling. This isn't a distant theory. It says the exact sequence we've observed in prior metals cycles. When it hits hard, and it happens fast. And there's one more layer to this story: global sentiment. The average person still underestimates silver. They think of it as less important than gold, or just an industrial metal. That's a massive misconception. Those who recognize silver's dual role as both an industrial necessity and a strategic asset are already positioning themselves quietly, often before anyone notices. This gives them a significant advantage. By the time mainstream media catches up, silver could already be moving sharply higher. Finally, consider timing. The convergence of tightening supply, rising demand, and macroeconomic uncertainty creates a perfect storm. Every day the market waits. Every day investors hesitate. The potential for a sharp, sudden move grows. This isn't gradual. This isn't speculative. This is a structural issue, one that can trigger dramatic price action at any moment. And when it happens, those who act first benefit the most, while those who delay face scarcity, higher premiums, and potentially missed opportunities. Now, let's bring this full circle, because understanding the supply crisis is one thing, knowing how to react is another. The first thing you need to grasp is that silver is no longer a passive investment. It's an active, strategic asset in a world where physical scarcity is real, growing, and highly consequential. Every decision, every purchase, every ounce you hold or fail to hold can influence your personal outcome when this crisis unfolds. Think about the bigger picture. Markets are interconnected. A tight silver supply doesn't just affect bullion prices. It affects industries, currencies, portfolios, and even national economies. When physical silver becomes scarce, premiums rise, industrial costs increase, and that pressure eventually ripples through everything tied to it. Investors, institutions, and even central banks notice this, and they adjust accordingly. Those adjustments are what create rapid price swings, sometimes overnight. And in that environment, being prepared and informed is everything. Here's the thing most people miss. This isn't about chasing short-term profits alone. This is about positioning yourself for stability, security, and opportunity. Silver is unique because it serves dual purposes. It's a tangible hedge against economic uncertainty. And it's also a vital industrial resource that continues to be indispensable. In other words, it's one of the few assets that matter on multiple levels, especially when global financial systems are under stress. Let me give you a real-world perspective. When physical silver supplies tighten, investors start competing with industries for every ounce available. This tension drives premiums up, makes delivery times longer, and ultimately creates a scenario where the paper market price no longer reflects the real cost of acquiring physical silver. That is exactly the kind of market imbalance that can catch casual investors off guard while savvy participants capitalize. And here's another point. Psychology and perception matter as much as fundamentals. Once news spreads about shortages, supply chain delays, or premium spikes, the market reacts immediately. Fear and urgency are incredibly powerful drivers. People start hoarding, bidding aggressively, and premiums surge. That's why timing and awareness are everything. Being early allows you to avoid the scramble and make strategic moves before the frenzy begins. At the same time, it's crucial to remember that silver doesn't exist in isolation. The entire precious metals ecosystem, gold, platinum, palladium, interacts. And the ripple effects of scarcity extend beyond one metal. Central banks, hedge funds, and large investors are watching closely. They're ready to adjust portfolios based on the unfolding crisis, and every move they make can amplify price swings. This creates a landscape of both risk and opportunity, and it favors those who understand the full scope of what's happening. So, what should you do right now? First, educate yourself. Understand where silver comes from, who's controlling supply, and how industrial and investment demand intersect. Next, consider physical allocation, coins, bars, or bullion that you can actually take possession of, not just paper derivatives. Finally, stay informed and alert, because this is a dynamic situation. Every day brings new developments, and early awareness is what separates winners from those left on the sidelines. And here's the reality. Once this supply crisis becomes widely recognized, we could see price movements unlike anything the market has experienced in recent years. Investors who act early may find themselves in a position to benefit significantly, while those who hesitate may face scarcity, higher premiums, and missed opportunities. The clock is ticking, the signals are clear, and the market is moving. So, my friend, keep your eyes open, stay alert, and pay attention to the signals in both the industrial and investment markets. This isn't hype. It's a real structural shift in the silver market, and it's happening right now. Those who recognize it, understand it, and take action stand to navigate the upcoming storm with confidence. Those who don't, well, they might be caught off guard, wishing they had listened sooner. Remember, this is the kind of market movement that doesn't just affect your portfolio. It affects industries, economies, and everyday people in ways you might not even realize yet. That's why staying informed, proactive, and engaged is more important than ever. And when silver finally responds to this tightening supply, the effects will ripple through every corner of the financial world, fast, sharp, and undeniable. So keep your focus, stay calm, stay educated, and be ready. Because this is the silver supply crisis, and it changes everything.